Hey guys, welcome to Investify, where we help you grow your wealth through smart investments. Today, we're about to dive into Warren Buffett's invaluable wisdom on how most people can invest wisely to build wealth. Discover the 7 golden rules that have stood the test of time and can set you on the path to financial success. Let's get started. Warren Buffett, often referred to as the Oracle of Omaha, is undoubtedly one of the most successful investors in history. With a net worth that ranks among the highest globally, Buffett's investment strategies have made him a legendary figure in the world of finance. Throughout his illustrious career, he has consistently shared his insights and principles, which have become invaluable lessons for anyone seeking to build wealth through investing. In this comprehensive exploration of Warren Buffett's 7 golden rules for achieving financial success, we will delve into each rule, examine its significance, and provide practical applications for today's investors like you. These principles, drawn from Buffett's personal experiences and wisdom, offer a roadmap for those looking to secure their financial future and leave a lasting legacy for generations to come. The first golden rule is all about the incredible power of compound growth. It involves reinvesting your earnings and dividends over time to generate exponential wealth. Warren Buffett demonstrates this with a historical example. Investing $10,000 in an index fund in 1942 would be worth a staggering $51 million today. The key lesson here is that patience and persistence are essential in investing. By committing to the long term and reinvesting your earnings, you unleash the potential for exponential growth. This principle applies to stocks, real estate, and other investments. The second golden rule emphasizes maintaining a steadfast, long-term focus. It's easy to be swayed by short-term market swings and headlines, but lasting wealth is forged through disciplined, long-term thinking. Warren Buffett's approach embodies this principle. He buys companies as if he'll own them forever, weathering economic storms. During the 2008 financial crisis, he stayed confident in America's long-term potential. This rule underscores the importance of picking enduring high-quality investments. By doing so, you can navigate market volatility with confidence, knowing your investments are primed for lasting success. Rule 3 advises you to disregard short-term market noise and distractions. Daily market swings, sensational headlines, or stock price fluctuations shouldn't dictate your investment choices. Instead, prioritize a consistent strategy aligned with your long-term goals. Warren Buffett's experience illustrates this principle. He bought City Service preferred stock during World War II, despite negative headlines. His conviction in the long-term success of American businesses allowed him to make wise decisions unaffected by short-term market shifts. Studies consistently show that timing the market leads to subpar returns, as the efficient market hypothesis argues. By following this rule, you'll maintain discipline, avoid impulsive reactions to temporary market conditions, and focus on long-term success. The fourth golden rule highlights Warren Buffett's unwavering faith in the resilience of the American economy. He often points to America's historical success as evidence that, despite occasional setbacks, its economic trajectory is overwhelmingly positive. Buffett's optimism traces back to America's founding in 1776, emphasizing the consistent growth and prosperity the nation has enjoyed over centuries. Despite facing crises like wars, recessions, and financial turmoil, the U.S. economy has consistently rebounded and expanded. This principle advises you as investors to have confidence in the long-term prospects of the American economy, recognizing its robust history. It reinforces that the U.S. remains a leading global economy known for its enduring resilience. Before we continue, remember to show your support by giving this video a big thumbs up, subscribing to our channel, and ringing that notification bell to stay updated with our latest content. The fifth rule introduces the concept of distinguishing between productive and non-productive assets. Productive assets generate income, while non-productive assets do not. Warren Buffett emphasizes the historical outperformance of productive assets like stocks compared to non-productive assets like gold. Gold, while a store of value, lacks income generation. Prioritizing income-generating assets such as dividend-paying stocks and income-producing real estate can lead to significant long-term returns through compounding of income and capital gains, enhancing overall wealth accumulation. The sixth rule advises against market timing and stock picking, advocating a diversified long-term approach instead. Research consistently shows the difficulty of successful market timing and stock selection, even for professionals. Warren Buffett champions a patient, long-term strategy emphasizing the importance of identifying quality businesses and holding them. This approach steers you as investors to clear off market speculation pitfalls, allowing them to benefit from the growth potential of sound companies. The seventh rule emphasizes the importance of simplicity in investment strategies. Buffett suggests that successful investing does not require complex financial knowledge or sophisticated trading techniques. Instead, it's about having a clear investment philosophy, understanding the basics, and staying disciplined. Warren Buffett himself is known for his straightforward approach to investing. He often quips that you do not need in-depth knowledge of accounting or financial terminology to be a successful investor. The key is to have a clear investment philosophy and stick to it rigorously. Studies consistently show that simpler investment strategies, like index investing, often outperform complex approaches over the long term. In conclusion, Warren Buffett's 7 golden rules provide invaluable guidance for those pursuing wealth and success through investing. Embrace the power of compounding, prioritize the long term, tune out short-term distractions, maintain faith in America's resilience, favor productive assets, issue market timing, and embrace simplicity. Remember, patience and discipline are your most potent allies on the path to financial prosperity and security. We've just unpacked Warren Buffett's 7 golden rules for building wealth through smart investments. Now, it's your turn to join the conversation. We want to hear your thoughts, questions, and experiences related to these golden rules. Let's keep the discussion going. Here are a few more prompts to encourage everyone to share their insights and experiences. Are there any specific stocks or investment strategies inspired by Warren Buffett that you've found success with? Share a personal story or example of how you've seen the power of compounding work in your own investment portfolio. Have you read any books or watched any documentaries about Warren Buffett's investment philosophy? What key takeaways did you gain from them? How do you stay disciplined during market turbulence and avoid making impulsive decisions? Share your strategies for maintaining a long-term focus. Do you agree with Warren Buffett's belief in the strength of American economy, or do you have a different perspective on the global investment landscape? Remember, the community is a place to exchange ideas and learn from one another. Your experiences and insights can be incredibly valuable to others who are navigating the world of investing. So let's continue the conversation and help each other on our financial journeys. That's it for today. Thank you for watching. Don't forget to like this video, subscribe to our channel, and ring that notification bell for more updates here on Investify.